Good morning, trading world. It is October 27, 2022, and this is my pre-market outlook and technical analysis for trading the markets. Will this so-called rally falter even more with the big GDP print and jobless claims ahead of the market open? Today we have two market moving reports due out an hour before the open. GDP and jobless claims are due out at 8:30 a.m. These two reports are sure to move the market, setting off a domino effect, but in which direction? Two things to consider with the news release and market direction. One, will good news be bad news, or will bad news be good news? Meaning a strong GDP report could give the Fed the ammunition to continue hiking rates by leaps and bounds, therefore choking out growth and starting a rotation out of equities into the bond market. Two, a weak GDP and jobless claims could give the market false confidence that the Fed is happy with the progress of their fight with inflation, therefore possible backing off on the rate hikes, causing some immediate investor confidence boost and seeing an energy boost in the current flailing rally, causing another gasp higher. In my opinion, because of where we are on the chart time frames that matter, we are not oversold or overbought, but kind of at a midway point on the daily and weekly time frames. We are likely to see a pullback, then another gasp up on Friday, trying to make back whatever this pullback takes away and maybe a little more. That brings us to the key levels of the day, which I bring up. Nothing has basically changed from yesterday. Let me bring that up. All right, here we are back with the key levels of the day, and let's start on the support side. Levels are pretty much the same as yesterday. Jack support area is 381 to the 380 area. Queen support is 379 to the 377 area. And then King support 376 to the 371 area. On the resistance side, Jack resistance is 383 to the 384 area. Queen resistance is 385 to the 386 area. And King resistance is 387 to the 391 area. The main thesis for today is bearish, closing below the 382.02 with a projected target low of between 381 and 374. The alternate thesis is bullish, closing above the 382.02 with a projected target high of between 382 and 391. The current major channel we're in is 379 all the way up to 397. The major channel below is 379 down to 364. We do have harmony between the technical side, which is bearish, and the quant side, which is bearish. Market strength and order flow has fallen significantly, giving us a lot of room for a big burst to the upside later today or Friday. Remember, in an earlier pre-market this week, I said the leftover order flow may not be completely conquered until Friday. So don't be surprised if we get a spike down either on news or overnight, being that we have this news coming now, this GDP drop. Don't be surprised if we spike down on that, or even overnight between Thursday and Friday pre-market. down toward the 366 area, which was the weekly retrace that I called at the beginning of the week, and still closed the week above 374. Today, there is something to be said about the scattered market strength, because a lot of sectors and stocks are up, meaning positive, and ready to continue the run. But we are going to be held back by a few key big market cap stocks: Microsoft, Google, Amazon, Apple, and I need to throw the artist formerly known as Facebook in that group too. They are all down, and these are what will hold the market back today. So it's kind of lining up. We're kind of in the middle of things. We're outside the upper end of that volatility box, which means we could very much take off to the upside, but a visit back below that 38 or 380 level on the SPY drags us back into that volatility box. And if we get inside that volatility box, we are going for a ride. We could go all the way back down to the 364 level, because that volatility box has that strong a suction. As whenever we get in there, we basically go for a ride all the way through. There's no stopping and jaunting in the middle. We're going to go for a ride all the way through. So that is something to keep an eye on. Let me bring up the scenarios of the day. All right, our first and most probable scenario of the day is going to be our expanded range day structure. We could have an initial drop lower due to the GDP report, and then a spike back. That initial drop lower, find support, and chop back and forth before grinding back to the upside, and then fading at some point from one of those boundaries that we set on that grind up. So that is our expanded range day structure. And I'm going to apologize because I do this in a written version, and I tend to expound a lot more on the video version, and there's some things that don't get written that are key details in the videos. So I apologize for that, but a lot of it is due to time constraints and trying to get the material out. All right, our next scenario is going to be our trend day down, meaning we would open gap down. The news from the report comes out and gives us a flash or flush down, and after the open, we get a bounce back trying to fill that gap, but we fall short, find resistance on or before that previous close, and then enter our golden window of trade. And that's going to be the downtrend for the day, and better known as the best time to trade. We find our midday chop around either the possible queen or king support level. Start off the second part of the day with a head fake, looking to continue that main or primary trend of the morning, and then at some point going, or in the second half of the day going in toward the close, we get a minor kind of pop or rally, more of a sideways push up into the close for today. Now, there is an alert, a vice versa alert for this as well. And the vice versa alert has a lot to do with the report. If we get a worse than thought upon GDP and jobless claims, it could really do something like this to kind of push us up, and then we fall back and find support on or before that previous close, and then get our main trend of the morning, better known as our golden window, best time to trade, and find our midday chop somewhere between our between our queen and king resistance levels. And then again, kind of start the second part off of the day with a head fake, looking to continue the primary trend, and then pretty much a kind of fade back into the close of today. So that would be the vice versa alert on our trend day model. All right, our last scenario is our rounded reversal day type structure. We could get a continued push lower towards the jack or queen support area, find our midday chop around our either queen or king support area, and then the second half of the day we start a pretty much rally with the same amount of force that we came down with to begin the day. Also, there is a vice versa alert on our rounded reversal day type structure, and our rounded reversal will pretty much be the opposite of what's going on here now, which would be a drop down on the report, and then we get a continued push higher off of the cash open, finding our midday chop around either our possible queen or king resistance area, and then pretty much fading the second half of the day with the same amount of force that we popped up with in the beginning of the day. So those are the three scenarios that I will be planning for. Please be careful today, because it will be a wild day, because these reports will move the market one way or another today. So as I say every day, your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk that we put on in each position. And we manage that risk in accordance to our account size. I like to close out each pre-market video by wishing you a positive trading day. Let's go out and make it a great one.